Hello fellow stock traders, welcome to this tutorial where I'm going to show you how to conduct a quick analysis of any company using StockTrader.studio. I've got Apple open here as an example. This is the company summary where right off the bat StockTrader.studio gives me some visual clues about how the company is doing over some key financial metrics. There are helpful red, amber, green indicators next to each one. By hovering on each of these metrics you will get more information such as the metric definition, the formula used for the calculation, and a graph that shows how it compares to the rest of the market. I start with revenue and earnings. I make sure the company is profitable and shows a past history of growth and promising future prospects as estimated by analysts. This is telling us that over the past 5 years, Apple has achieved a compound annual growth rate of 7.3%, while over a trailing 12-month period, its growth has only been 1.4%. This tells us that the company growth has recently started slowing down compared to previous years. For the next financial year, analysts are forecasting a revenue growth of 6%, which is just below the market median. Not terrible, but not impressive either, hence the amber indicator. One question we are often asked is, how much can we trust these forecasts? StockTrader.studio sources the estimates from LSEG, formerly known as Refinitiv, widely regarded as the most respected provider of high-quality financial information globally. The value shown here is a weighted average from multiple analysts, with a greater weight assigned to those who over time have shown to be more accurate than their peers. That said, forecasts are never bulletproof, so it's important to factor in a potential margin of error. If you want to get an idea of what this margin of error might be, you can click on the Analysis tab and see historical performance against the consensus estimates for both earnings and revenue over recent quarters. The meet beat miss indicators give a quick snapshot of how frequently the company has outperformed or underperformed expectations, along with the percentage deviation from the estimates. This can provide valuable insight into how reliable the forecasts tend to be for a particular company. Moving on to the EPS, or earnings per share, Apple has a strong history of growth in the 68th percentile, but the trailing 12 months value shows a loss. On the positive side, analysts are forecasting a strong recovery in the next financial year. You can see these trends in the financial history section down below. By hovering on the EPS normalized row, the bar chart on the right will show you a time series over the past 10 years with 2 years of future estimates. You'll notice here that between 2022 and 2024, the earnings stay completely flat, but are expected to increase considerably over the next 2 years. Now, if you want to know exactly why Apple's growth has stalled in recent years, we can click on the Segments tab and have a look at the product revenue segmentation table. Apple's main revenue source has always been its hardware products, with the iPhone alone accounting for over 50% of the company's total revenue. However, as we can see here, iPhone sales have been practically flat over the past 4 years. Most of the revenue growth has actually come from services like Apple TV+, Apple Music and Apple Books. This is worth noting because it suggests that Apple has reached market saturation with its flagship product, and is attempting to compensate by expanding into new service offerings. However, these new offerings could be more competitive and potentially lower margin than the previous ones. Back to the Summary tab, and you'll find a number of other key financial metrics about the profitability, liquidity, and leverage of the company. We won't go deep into each one, that might be a topic for another video, but if you hover on each one, StockTrader.studio will show you the formula and definition. When I'm doing a quick assessment of a stock, the next thing I do, after looking at the profitability metrics, is to try to estimate the fair value of the company. I use the valuation widget to easily calculate the fair or intrinsic value of the company and compare it to the current trading price. Estimating the fair value of a company is a crucial step to deciding whether a stock is a buy or not. If the stock is trading below its fair value, we have a potential buying opportunity. In the opposite case, we have a reason to proceed with caution. The discounted cash flow model calculates the value of a company based on the earnings it's expected to produce over the next 10 years. Since future earnings are worth less than present earnings, the formula applies a discount that increases proportionally each year. But don't worry, you don't need to worry about any of these complexities. StockTrader.studio handles them all for you behind the scenes. All you need to do is input your assumptions and let StockTrader.studio do the calculations. By default, the widget uses the EPS analyst estimates for the first and second year, and the recommendations of Charlie, our integrated AI assistant, for the long-term growth between years 3 and 10, and the terminal PE ratio. This is the PE ratio we think Apple will deserve in 10 years' time. If we want, we can change these parameters. For instance, if we believe that Apple will grow more than 5.8% a year between years 3 and 10, we can input a custom value and see the result changing in real time. Charlie does tend to be conservative in its estimation of the terminal PE ratio. It'll never use a value higher than 20. This is because even if a stock is currently very popular, with investors willing to pay 30 or 40 times earnings, it's really hard to predict if this is still going to be true in 10 years' time. If you disagree with this approach, you can either use the 5-year average or input your own custom value. Every time a value is changed, the fair value is recalculated in real time and compared to the current enterprise value of the company. The result at the bottom right corner will tell us if a company is undervalued, overvalued, or fairly priced. This is also how stocktrader Studio calculates the value score of each stock. A score of 50 indicates that the stock is trading in line with its intrinsic value. Below 50 signals that a company might be overvalued, and above 50 signals a potential buy opportunity. The assumptions behind this calculation are coming from Charlie, but again, if you want to play around with the numbers, you can always do so using the valuation widget. The other two scores are there to give you a quick idea of how profitable the company is and what its growth potentials are. These numbers are calculated by comparing the company's profitability and growth metrics to its peers. As a general rule, if a company is doing better than the market average, the score will be higher than 50. Remember that these scores are just to give you a quick summary of a stock, but before making any investing decisions, I invite you to spend some time performing a broader analysis of the company. Beyond what I've just shown you, in stocktrader Studio you can find the company news and press releases, the calendar of events like dividends and earnings releases. You can read the earnings call transcript or even ask Charlie to summarize it for you. You can see the current institutional holders and insider transactions. There's so much information, but this is just meant to be a quick introduction. We are going to be releasing other videos to cover more specific topics in future. I hope you've enjoyed it, and if you have any questions, feel free to explore our learning section or reach out to our support team. Don't forget to subscribe for updates and future tutorials. Happy trading!